We're also rolling out a new system for monitoring of data use, which has proved actually very attractive also. People want to know how much they're using their data and how they can economize on it in the United States and Europe as well. And we also have done some investments in bringing cheaper phones onto the market. Our Android system enables you to buy a smartphone for $50, perhaps even less, in India compared to the latest iPhone, which might be $1,000. All of that still leaves unresolved the question of access to broadband and other infrastructure. The private sector can do a certain amount of help on that, again, using new technologies to make it simpler. At Google, one of our moonshot ideas is to have what we call Loon, which are essentially balloons circulating above a space and beaming down the ability to provide Wi-Fi. But this is, it's a moonshot. It's not possible yet. And in the meantime, it's extremely important, this is where governments come in, that governments really focus on providing the kind of infrastructure, not just roads and rails and ships and so on, but also broadband infrastructure. And I would urge that everybody who's doing an infrastructure plan for the public sector also think about that kind of infrastructure. It's incredibly important to allow the benefits, the potential benefits of the internet to be shared. The other thing that's really important is how you regulate this access, because in some places, and this is true in some ASEAN countries, the lack of competition in the in the telecom sector can mean that rates charged for access to Wi-Fi and to data are much higher than they are elsewhere. In fact, in the United States, often this is much higher than in Europe because there is less competition, and that's an important regulatory element to make sure that things are open. My last point is just how easy it is. I talked about putting phones in your pocket. We believe, the CEO of Google believes that the next development is going to be, it went from desktop first to mobile first. We'll go from mobile first to AI first, to artificial intelligence, augmented intelligence, machine learning. What that means is that we will be able to speak commands. We will be not so much tied to a particular phone, but we will be able to move around and have smart houses as well as smart cities, and be able to reach people even more easily than we can now. We'll be able to reach people, for example, through better translation. We've already made enormous gains in that, and that's a very important element for spreading of technology into a country such as Indonesia. We learned yesterday about the number of languages that there are here. Some people worry that the importance of AI might mean that only some people have access to it. But one great trend is that there is more and more openness around this technology. There are small startups also in that space because there is a lot of open data, and there are even open source programs for artificial intelligence. I mean, Google has issued one that is TensorFlow. There is a lot of research that is being published. And there are many issues around the future of work, around discrimination.
Of what I call RI, access, regulate, and artificial intelligence. Three very good points. RI is a Japanese name. So, but anyway, next I think we've got Charles. Charles, why don't you say a few words?
Thanks, Andrew, and thanks to the organizers for bringing me here. As you mentioned right at the start, I've had a number of jobs over the past 10 years or so, and I was trying to figure out which hat I would put on as I sat on the stage this morning, and I thought I'd make a comment from three of my my former hats. First, from the perspective of the Institute of International Finance, where I was the chief economist, I had the opportunity to sit in on board meetings of the chief executives of the global financial institutions. And at those board meetings, I have to say that the first thing that everyone had to talk about was the impact of financial regulation on their businesses. That was a predominant concern over the last few years. But what the CEOs really wanted to talk about was not global financial regulation. What they wanted to talk about was fintech and what was happening there. From two perspectives. One was that they were really scared. They were really scared that their business was being eaten up by others, that their best cherries were being picked by incredibly rapid innovations that were occurring, generally driven from outside the established players in the financial industry and driven by the new players. GrabPay being one, but there's an enormous range of new players. We certainly see that in the advanced economies, but even perhaps more so in the emerging markets. I would say that at this point, China is the country that has gone furthest in advancing fintech products, and it's been almost entirely driven outside the established banking system in China. And this is really a threat. It's an existential threat to the established financial systems that have expensive legacy systems, both in terms of IT and in terms of HR. They don't have the cultures to adapt quickly. So there was a genuine fear among the bankers that they were going to be deeply damaged by these trends. But on the other hand, they also saw that there was a huge opportunity as well for those who were able to seize the moment, to get ahead of the curve, to take advantage of the real attributes that the big banks have in terms of experience, financial expertise, established reputation, that those who are able to seize the moment, to move quickly, to find ways of taking advantage of the new technologies, would indeed prosper and, in fact, would be able to increase their market share and really do well in the new digital economy. So there's really a dual concern of fear on the one hand and opportunity on the other. Second point I would make, putting on my hat when I worked previously at the IMF, running the World Economic Outlook, looking at what are the macroeconomic consequences of the fintech wave that we've seen over the past 10 years. And certainly it's important for the advanced economies in terms of driving innovation, increasing productivity, but it's probably a relatively small effect and quite hard to measure. One of the frequently made observations that people make is that it's hard to see benefits in terms of the productivity growth from all the digital economy innovations so far. So it's relevant for advanced economies, but where it really makes a difference is in the emerging economies and the low-income countries. And this is really picking up a point that Caroline made and others have made. In a way, fintech is a great equalizer. It provides new opportunities for countries and for people who in the past have not had access to financial services. Over 50% of adults in emerging markets and low-income countries 5 years ago did not have access to even rudimentary financial services. But with the spread of mobile banking and using, you don't have to have a really smartphone, you can have a moderately smartphone, and you can still get access to very simple, straightforward deposit facilities, to new forms of credit, to insurance, to information that is potentially transformative. And it's really incredible what we've seen happening, for example, in countries in Africa, countries like Kenya and Tanzania that have really been ahead of the curve. And for these countries, I think it makes a huge difference to their potential. It increases the potential for investment, for savings, and for growth. And it does so in a way that also provides opportunities for the poorer people, not the people in the urban, more sophisticated areas, but in the rural areas, the people depending on agriculture. So I think from a macroeconomic perspective, it's really a really important development. Finally, I'll put my hat of former policymaker at the US Treasury Department, where I have to say we looked at fintech developments as a two-edged sword. Certainly there were big opportunities to be taken by governments that were smart and savvy. In the US, we've certainly worked very hard in recent years to increasingly use digital technology, mobile phones, as a way to transfer money to people, for example, Social Security payments, not through the old form of checks, but rather directly into people's bank accounts, to reduce costs, to have better targeting, to reduce opportunities for corruption. So this is happening in the US, but even more it's happening elsewhere, and even more it's happening in emerging markets. I was just in India last week, which has made major strides in using opportunities created by fintech and by mobile banking to better target, to reduce costs of their transfer and subsidy systems. I think this is a really important innovation, a major opportunity. But at the same time, there are also concerns that certainly Treasury had about opportunities for channeling money to people who should not be receiving the money, the opportunities for terrorist financing, the opportunities for organized crime. When you have these new digital currencies, for example, you don't have to go through the organized financial system. The Treasury's become rather good at tracing money through the organized financial system. There was a real concern that they would lose the ability to track the financial flows through the system as these new forms of financing became more and more prevalent around the world. So on the one hand, appreciation for the opportunity, but also a really deep concern about some of the other possible implications.
Thank you very much, Charles. That's a great summing up of how we should think about the digital economy. Number one, it transforms our lifestyles. The whole way we work and live changes very dramatically. Secondly, it changes our business models. How do we make money from this, and how do we get income from this? This is a completely new ball game. And then thirdly, of course, the policy aspects, which Bob Mirza and Tobias will talk about. But now we have a great opportunity from somebody from Grab, who is started as a startup within ASEAN, and now is a great success story. Jason, please.
Thank you very much. So first of all, it's a great privilege for me to be here to sit alongside such distinguished guests, so thank you. I guess this morning, three things that resonated with me from the session was around 3 points. Was the inventors of new platforms that would enable the middle economy of Southeast Asia. Secondarily, around economic stability, how the bottom of the pyramid needed to be activated and have wealth distribution to enable stability. And then thirdly, the way that people are at the center of everything we must do to enable growth in Southeast Asia. And all of those points really resonated with, really what I do as a day job inside of Grab. And so I wanted to share how those things are relevant to us. I also wanted just to say that, as I sit here, I represent Grab. But actually, I represent the middle economy of Southeast Asia because they're the people we serve every day, and they're the people we learn from every day. So I hope to try and bring some of the texture of the people that we serve. So inventors of these new platforms that bring employment, bring wealth to Southeast Asia. I don't necessarily want to position Grab as an inventor. I don't think that's appropriate. But what is important is, how do these things happen, these huge platforms? We look at something like Google, which is globally renowned, but it starts somewhere. The story of Grab started in Malaysia. Hoi Ling Tan, the co-founder, was traveling. She was scared. She was a young professional. She was traveling in a car, and there was a high threat. A threat of her being abducted, a threat of her wealth being taken, and other more sinister threats. That was the basis of Grab, solving a problem of safety. And today we're blessed. We have 84 million people that trust us to solve that problem every day, to take their children to school, to take them to work. So we've scaled very quickly. This platform, this invention has scaled very quickly. In January 2017, we had 30 million people. Now we have 84 million people. Southeast Asia is in a revolution. It's scaling. It's not an emerging, when we think about emerging geographies, the challenge with Southeast Asia, it's colossal. The speed of adoption, the knowledge of the people is phenomenal. And so, as we think of these platforms, as we think about technology, as we think about infrastructure, as we think about regulation, we're not going to be blessed with slow growth. This is volatile growth. So all of us need to work together to be able to deliver stability of the services that we're offering in Southeast Asia. And those services need to be able to scale very quickly. Today, if Grab as a platform didn't operate, 84 million people would need to find a new way of traveling. But the problem is, 2.4 million drivers would need to find a way of feeding their families. That's the responsibility we have as we develop new platforms and new services. So I think as inventors, as new platforms for engagement and for employment, we have to think about the people we're serving and the impact we're having on their lives. If we think then into economic stability, the distribution of this new wealth, a driver inside of Grab earns approximately 32% more driving with Grab than they would if they were in local employment. That stimulates the economy. Today, Grab's in over 100 cities in Indonesia alone, over 100 cities in Southeast Asia, creating employment, not distributing wealth in maybe the way that privileged people like ourselves think about it, but spending money in the economy. Food is very, very important in Indonesian culture. Every day these people are buying breakfast, they're buying lunch, they're buying snacks, they're buying food for their family. That wealth distributes into the lower economy. And that economy is what brings stability. As was said this morning, it's only when you find ways of distributing that wealth in the community into the bottom 20% of the economy, the really underprivileged people, that we bring stability to Indonesia and Southeast Asia economy. So I just want to bring a real life story to this. In South Jakarta, about a kilometre away from our Kudo agent head office, there's a small aquarium store. Not one that has a great frontage, that's got fantastic products and services, very humble dwelling, where a lady there, Sumiati, has very limited stock. Unfortunately, where she was previously was closed down and she was relocated. She lost all of her customers. Equals, she lost her income. She was struggling to feed her family. I've met this lady twice. The first time, quite by accident. The second time, because I was so humbled by the experience with her, I wanted to learn more. She knew her family couldn't sustain on the income she had from the aquarium store. She'd lost her footfall, her traffic, her consumer. So she learnt from her phone there was a company called Kudo, and through Kudo she could sell mobile top-up, bill pay, and other services. Today, Sumiati is doing really well. Sumiati has a vibrant store. She's recruiting drivers every day through agents in Indonesia alone. We recruit tens of thousands of drivers. And we pay agents, stores, to recruit those drivers for us in the local community. She's helping people pay their bills. She's connecting the offline and the online world using her mobile phone. And Simiati is also has a vibrant aquarium store because she has new footfall, new consumers. 50% of an aquarium store income is coming from a new emerging platform, a new way of doing business. I think that's an extraordinary story. But what I really like about Simiati is what she taught me about her business. So the first thing I learned is there is very little that I can teach her. She is very smart. Her working capital is 24 hours. Can you imagine any one of our businesses working on 24-hour working capital? Her ability to account for that business is extraordinary. She also knows exactly how much money she needs to borrow to double the size of her business. And she knows how much she can afford to pay back in interest. And she knows today she can't get that loan. She can get the loan, but it's not at an interest rate that will help her. And also, it's not from a bank, because she doesn't believe banks can serve her. She doesn't believe they want her. That's not my opinion, that's Simiati's. She's also very, very clever. She understands loyalty. She has, I remember growing up, my mother had a red line book in our business. And every day she writes down mobile telephone numbers, how many times somebody's transacted, what value. And she has her own loyalty program. And she gives free distribution of mobile top-up as a part of her loyalty program for her store. She would love somebody to help her digitalize this. She would love somebody to help her to have a loan that could grow her business. In terms of cash, she doesn't like cash. There's a risk of having cash in a store. Simiati is quite a small lady. She worries if she has too much cash, that cash can be taken from her. There is a realism of petty crime. So she's worried about cash, and she would prefer to have digital payments. But she must be able to see her money in one place. So if she adopts digital payments and it's fragmented, her money is in many different places. And she can't look at the working capital in the same way. So that would prevent her from adopting. But Simiati is an amazing person, and she represents millions of amazing people here in Indonesia today. And at Grab, we find ourselves privileged to work among these people and generate employment with them. So this economic stability and these people and how they work, I think we've really got to learn their specific problems in the same way that Grab learnt about the specific problem of Hoiling Tan and solve for safety. We now need to solve for the next problem we're solving really is around cash and around inclusion and around financial services. But I wouldn't see Grab as a disruptor. I would see Grab as an enabler, like a lot of emerging companies. Our aim is to take the trust that we've built with these many millions of people and bring them from an invisible status for financial services and inclusion to a visible status. Be that with existing banks and financial institutes, or be that with new financial institutes that are emerging. That's our ambition. Our ambition is to make sure Simiati can have that loan and can repay that loan, and it's appropriate for her to grow her business. Our aim is also to make sure that the distribution of wealth has stability in the local economy. Not just the macro economy, but the local economy. Lastly, I think, Grab, people wonder why such an organization as Grab is moving into payments and financial services. Back to the inventors of platforms. Realistically, Grab is probably the largest marketplace in Southeast Asia. We're the #1 ride-hailing company, that is for sure. But we're the largest marketplace and the largest internet platform in Southeast Asia. Our biggest competitor is cash. Cash in Malaysia is 92%. Cash in Indonesia is well into 90%. Cash in Singapore is over 60%. The biggest competitor is cash. And there is no platform in Southeast Asia that is prolific today and can't be replaced. We are the biggest of the small, realistically, because we're growing. However, with a single platform across Southeast Asia and everything we have learned from China in the way that Ant Financial, the way that Tencent, the way that Didi grew, the number one digitalized service is transport. And that allows us to grow our relationship and our trust with millions of consumers. It also allows us to create mass employment. Today in Indonesia, we've created employment for 3 million people, agents and drivers. By the end of 2018, we will have created, our commitment is to create employment in Indonesia for 5 million people. And next year, I'm sure it will be a whole lot higher. So the platform we're creating isn't a ride-hailing platform. It's a platform that enables us to distribute wealth into the middle economy, and it's a platform that enables our partners, be that regulators, be that banks, be that other organizations, to connect through technology to this new audience, bring stability, bring financial distribution to these people. As a guy that up until 15 months ago was based in London and come to this new emerging market, I think it's a great honor to work not only in Southeast Asia but actually in Indonesia. And for people that are visiting, I'd encourage you to get to know Southeast Asia. It's a wonderful experience. It's a fantastic cultural experience. And the people are some of the most humble, kind, and generous people I've ever come across. One of the things that stands in my mind is Bill and Melinda Gates. On most of their documents, there's an opening statement. And the opening statement is, why is it the poorest people in the world are charged the most? It's a principle that's just wrong. And I think as GRAB, as people of the IMF, as people of Indonesia, of Southeast Asia, I think that's what we must come together to solve. To allow people in the middle economy to access things at a competitive rate and allow them to access financial services in a way that they want to. And if we achieve that, I think we'll all be blessed.
Thank you very much, Jason. Jason has proved the success of a startup is not about digitization. It's about people. If you solve the human side of the digital economy, you've got speed, scale, and scope. Okay? You have to touch that human nerve. And I have to touch it every day because I have to persuade my wife, Alexa is not my girlfriend. You know that joke, but you know, the main competitor of Grab is cash. And what is the business of cash? It's the business of central banks. So now we have Pak Mirza, who's the Senior Deputy Governor of Bank Indonesia, to give us how central banks think about cash and cyber currency. Pak.
Okay, thank you. Indonesia is a country that if you fly from Sabang to Merauke is about 8 or even 10 hours flight. And it's a country with maybe 250, 260 million people. And the country is so diverse, and the prosperity of the people, province by province, is also different. So of course, as a regulator, as the monetary authority, as the payment system regulator, as the financial stability regulator, so we believe that digital economy can help Indonesia to grow and can help Indonesian people to be get the prosperity. Yeah. So I think people may be questions what is the stance of Bank Indonesia on this digital economy. So I want to make it clear that Bank Indonesia pro-innovation. Bank Indonesia is pro-efficiency of economy. Bank Indonesia is pro-deregulation of economy. Even we actually asked by the government to help the government to make the evaluation and analysis of the impact of the deregulations. So we believe that this digital economy or the innovation of the technology can help the Indonesia. But as the regulator, as the financial stability, as the monetary authority, we want to make sure that the companies, the environment of the digital economy has the risk management properly. And because there is a cyber risk there is a money laundering risk there. Yeah. So we want to make sure this, awareness on this, the environment, the business sectors that do the digital economy, yeah, to facilitate digital economy, understand about this risk. And we are a country that still has a current account deficit. And we are a country that needs offshore funding. Our banking sector is still small. Our pensions plus mutual funds plus insurance is still small. So Indonesia needs a lot of funding from overseas. But the funding from overseas also depend, affected a lot by what happens in the global economy, what happens with the move in the interest rate in the global economy. So fluctuations in the market is our daily life in emerging markets, including in Indonesia. So current account deficit is one of the things that we want to improve the current account balance. Yeah, how to make it small, or even how to make it surplus. Because what we believe, if we can make it surplus, then we can have much better stability to manage this country. So if we're talking about digital economy, we're talking about e-commerce. Of course, we know that now the benefit is for the consumers. It's good, yeah. The consumer get the cheaper price. But we want our SME, not only SME in Jakarta, SME in East Java, SME in Sumatra, SME in Kalimantan, to also get benefit from the e-commerce, from the digital economy. If possible, this SME or Indonesian company can utilize the digital economy to improve our export. Then we can turn around the current account deficit, become the current account surplus. That's always, we're talking about risk, we're talking about how we restructure our economy to get benefit from this digital economy. Thank you.
Thank you, Pak Mirza. You've raised very fundamental issues because, the issue is that our traditional way of intermediation and savings is the banking system. And yet, as Pak Jason has mentioned, a lot of intermediation is still through cash. And because of the digital side of it, they're actually beginning to disintermediate also the banking system. So how can the banking system respond to the delivery of savings and convenience and trust to the people, especially SMEs, to create growth, is a very fundamental issue. You cannot just say, well, let the platforms do this, because if the platforms eat the lunch of the banks will also, get into, critical issues here. So, these are issues that we can, debate and discuss, but I think Tobias is just a perfect person because he was the one who highlighted how shadow banks ate the lunch of banks. Tobias.
Today, we're living in a time of tremendous technological innovation. The way in which the payment system is organized is undergoing massive changes. Those changes are based on higher computing power and new technology. And with these changes come tremendous opportunities as well as tremendous risks. From a policy point of view, the challenge is to create an environment that is taking advantage of these opportunities while making the new technologies safe for users and safe for the economy and the financial system overall. So one of the most visible aspects of this technological revolution that we are in the midst of has been visible in the past year in the dramatic rise and partial reversal of valuations of cryptocurrencies. Cryptocurrencies are one way in which technologies might revolutionize the way payments are done, but cryptocurrencies are by no means the only way in which payments are revolutionized. Very similar to the environment from 20 years ago, during the internet bubble of the late 90s, there were lots of IPOs, and it was unclear which types of IPOs would survive. It was clear that some of those IPOs would change the world, and indeed we see today that some of the IPOs from 98 or 99 have changed the world, but the majority of those IPOs have been forgotten. With the cryptocurrencies, the situation is similar. There have been over 1,000 ICOs, initial coin offerings, in recent years, and many, or if not the great majority of those, will have been forgotten. But I would like to make the conjecture that perhaps one or two of those are going to change the way in which payments are done in the future. What is difficult from a policy point of view today is that the cards haven't fallen yet. We don't know yet how the payment system of the future will look like. We see what has happened so far, but we don't know exactly how it's all going to come together in 5 or 10 years from now. What we do see today is that these new technologies generate opportunities in the form of financial inclusion. Participating in payment systems and participating in lending opportunities is much easier today than it was in the past. This has had tremendous impacts on a number of emerging markets and has the potential to have even more impacts on payments and ultimately on economic growth and innovation and entrepreneurship. From a policy point of view, the real challenge is to get the plumbing right, and this is where the analogy with the shadow banking system is apt. The plumbing of the financial system is what is going to deliver stability going forward. And that brings me to the risks. there are a number of risks in this payments area that are already becoming very visible and that are generating a need for policy action. First of all, with the rise and fall of cryptocurrencies, clearly the question has arisen whether cryptocurrencies are fit for being called currencies. Many are calling them crypto assets because the volatility of the value of the cryptocurrencies is so high. Secondly, these alternative forms of payment systems can be used for criminal activities, including money laundering and terrorist financing. So collecting information and having efficient forms of prosecuting criminal activity that is coming along with these new technologies is key for stability. Finally, we have seen a number of infrastructures, such as currency exchanges, either collapse or being subject to cyber risks. And that is, of course, unacceptable as it undermines the trust in the payment systems. So the policy challenge for regulators around the world is to provide an environment, a regulatory environment that offers a platform for conducting innovation that is safe, where users of the new payment systems can be reassured that their payments and their assets are being kept in a safe place, and where society at large can be reassured that the payment systems are not being abused for criminal purposes. So it is, it is urgent for the policy community to come up with a functioning regulatory framework. One variant of that is central bank digital currency. A number of central banks around the world are exploring, and some are even planning to introduce central bank digital currency as they see the advantages of the new technologies, but they also see the risks that are arising from the new technologies. And so central bank digital currency is one way to make sure that the advantages are being captured while safety is being guaranteed. So with that, let me finish my opening statement by saying that it is really the policy question around fintech is all about creating a safe environment that is capturing the benefits without putting the economy at risk.
Thank you very much, Tobias. That was a very good summary of the policy difficulties of this. You know, we are living in an age of internet speed. Things are moving so fast, such great scale, that policymakers need to make internet speed decisions. It's not easy. It's not easy. And I'm very, very pleased that the Bank of International Settlements, the general manager has now highlighted this issue, particularly of cyber currencies for central banks. And I think, Tobias, we need to make a decision very fast in this area. As a former securities regulator, I'm very familiar with IPOs, initial public offerings. Now I see ICO, International Coin Offering. I interpret it slightly different. I interpret it as IC0. That means, in the end, if you don't know what you're buying, you're going to buy some very big losses. So, the risks are clearly there. And the underlying tone of what we're discussing here, who are all concerned with cash, money, finance is the people element of trust. If we destroy the trust of the people in our coin, in our currency, we're in for deep trouble. Okay, now, I'm not going to ask questions as a moderator. I'm going to open to the floor because we are running a little bit late, and we immediately invite questions from the floor. Let's ask direct all these beautiful experts what concerns you most. Please. Yes, there's a gentleman over there.
Hi, Hamza Malik again from UN. In the previous session, we touched upon very briefly the importance of taxation for the governments to implement many of their initiatives, so on and so forth. There is a likelihood, or there is one scenario where the advent of digital economy may eclipse the government's ability to actually to raise revenues through taxation. If you're going to have robots doing the job, are you going to tax robots now? Or who's going to pay? If there are implications for future of work, where the dominant sources of revenue are going to come from. So in the panel, that aspect was not touched upon. So if we can have some insights or views on how we see the future of fiscal revenues in the context of digital economy. Thank you.
Very good point. The question is, how do you tax the digital economy? Okay, the upside is there, but how do you tax it? Anybody would like to offer an answer?
So, one of the advantages of the new kinds of payments over cash is that all of the electronic payments are in principle traceable. And so, provided that the data collection is adequate and that the right systems are in place, in principle, there are tremendous opportunities for governments to understand and to put systems of taxation into place that are much more effective and much more efficient than what is possible in a cash-based economy, right? And when you take a step back and ask yourself, if cash didn't exist, would you rather today create cash, or would you rather create a digital type of currency? I think it's obvious that we would much rather have a digital currency than cash. I mean, cash has many, many problems. And so the digital currencies do have the advantage of being traceable and of, in principle being, it is possible to directly plug them into a system of taxation and hence increase fiscal revenues. The potential for growth, I think, are obvious. It is much easier for entrepreneurs, for small businesses to participate in the economy when they are connected. And there's peer-to-peer lending, which is really becoming a source of growth, and it has tremendous potential for the future.
Thank you. Anybody else wants to respond? Pak Mirza and then Jason. Pak Mirza.
How to tax? If you want to tax, you must get the data. So how to get the data? So again, this is frankly speaking, this is still a challenge. This is still a challenge, but as a regulator, we basically mandate that the environment, the community, the business sectors that do the digital economy, that need the license from Bank Indonesia, from OJK, in the case of peer-to-peer lending, they must register with Bank Indonesia and also with OJK on the peer-to-peer lending, so that then we get the data on the transactions. So I think the Ministry of Finance is also doing this, because we thought the data, you cannot assess the risk, and also you don't know you don't know who is actually the who actually the risk inside on the transactions. and of course who to tax and how to tax. Yeah. So I think the government is moving on these directions, and we, Bank Indonesia, we are now building our data. We also just recently launched our NPG, a National Payment Gateway. So with the National Payment Gateway, we believe that we can get better data on this digital economy.
Thank you. Jason? Short, please. Time's constrained.
Sure. So I think when we look at the problems of macro adoption, one of the issues that we see in a lot of territories is closed ecosystems and closed data sharing. So if we look at China as a case study, we have 2 closed ecosystems, and so now that's not too bad. You know, we have CUP, we have Ali, we have Tencent. If we look in Indonesia today and we look at payments, even the small amount of digital payments is highly fragmented, and a number of ecosystems are becoming closed. So I think having an open ecosystem approach where multiple payment sources can be managed at a single point of sale, be that digital or otherwise, is critical. And I think policy around data sharing to enable future blockchain is also critical. So I see a number of closed ecosystems. I would encourage regulators across Southeast Asia to build policy against that.
Good. Now, we have time constraints, sorry, so I'm going to ask Caroline and Charles just to make some final comments, if you don't mind.
Thanks very much. Rich discussion. I just wanted to pick up on 2 points about how much the internet and digital economy can promote inclusivity. One is on small and medium enterprises. And this was mentioned a little bit earlier by Sri Mulyani, it is possible for very small enterprises now to access markets across Indonesia, for example, but also internationally. And this is an enormous change. We've seen research that shows that companies that have a website that are just connected to the internet and use that for sales have higher profits and pay their workers more. This is an enormous move away from the old world where you had to be big in order to develop marketing and so on internationally. Secondly, the cloud, which we haven't actually discussed very much, is also a great leveler. You no longer have to have a big IT firm, big IT department in order to use incredibly sophisticated data services. You can rent them to the extent that you need them through the cloud. And again, research shows that this possibility particularly helps young companies, which also tend to, of course, start small and to grow faster. So these are 2 ways in which the digital economy really helps to level and to bring players into the world economy that might not otherwise. Secondly, there is a whole world of education available online, which so the most asked questions on YouTube, for example, are about how to, and some of them may be how to tie a bow tie, some of them might be how to do algebra. There is the Khan Academy, which applies a lot of, which provides free, an amazing amount of material for people to learn from. So these are new ways that our younger people can almost sort of begin to take them for granted, but they're tremendously important ways in which, for free, it's possible to access more markets, to use massive data systems if you're a small company, to rent them, and also to get education wherever you may live, provided, as I said at the beginning, governments support the development of infrastructure.
Thank you. Charles, you have the last word.
Thank you. I guess I should put on my final hat, my present hat, as the head of the Independent Evaluation Office at the IMF. one of the things that we do is to assess to what extent the fund can stay on top of the latest developments. To what extent is it nimble, not just looking at patterns that it's been looking at for the last 50 years, but picking up on current trends. And clearly the digital economy and all the implications for the macroeconomy, but also for the policy-making challenges that it creates is an enormous topic where the fund really has to move very fast to stay on top of developments. I think all policymakers are working very hard to do this, and the fund is not an exception. We are actually beginning to do some assessment of the fund's work in this area. It's only premature at this point just to say anything about our conclusions, but I think it is clear that the fund really is working hard to grapple with these issues. And I think from what Tobias was saying today, but also if you look at the fund's website, there's a plethora of work in the area of fintech, the implications, for example, for financial inclusion, the implications for cross-border transfers, the implications for tax policy, at a broad thematic global level, but also at the country level. The fund teams are beginning to actually give specific advice to countries, whether it's India, Indonesia, China, about how to address the issues in their local context. So I think the fund really is beginning to move to take on these issues, and I think, frankly, the fact that this conference today is paying so much attention to this issue is really underlines that point of the importance of these issues for the International Monetary Fund, and I'm sure this is an area where the fund will continue to build up its efforts.
Thank you very much, Charles. Well, I apologize to all of you, but I think we've had a fantastic session. They have given us lots of food for thought about who eats whose lunch, but it's time for lunch. So I think we've got to stop here and let us thank the panel in the usual way. Thank you very much indeed. Wonderful panel. Terima kasih banyak. Okay. All right. Thank you.
Yeah, thank you very much, Mr. Cheng. Ladies and gentlemen, this ends of the second session, and we will now go for afternoon refreshment. May I inform you that lunch is served in ballroom 3, once again on the left side of this room. And for participants attending the afternoon prayer, you may wish to go to the praying room at the 3rd floor. And we also presenting premium product from small medium enterprises that has been assisted by Bank Indonesia and through the selection of international creator. We are also provide the money changer for your convenience. Please be informed that lunch will take place in 1 hour. So we will reconvene for the third session at 2:15 p.m. Yeah. Once again, lunch time will take place in 1 hour. So we will be reconvened for the third session at 2:15 p.m. sharp. Please enjoy your lunch and thank you.
Tempat sirna paniisan, lingkung lembur padusunan. Ayam mangsa kampung jadi kota di sisi pamungkungan jamak nuti dayung ngarungsi. Kampung-kampung dekat lir di kota, sisi gunung adadak segala ayam. Ele ngarang bumi di cisokan,